The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the June 14th Fantastic Friday. In fact, we're going to call it Happy Father's Day Fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. In fact, it's all of our responsibilities to lead an inspired life. So let's go look at one of our tools. This is the tool I call Fortune Knocks at the Door of Those Who Are Prepared. You know, Louis Pasteur, he once said, in the field of observation, chance only favors minds which are prepared. Even in the little things, those seemingly insignificant events of life, it is important to be prepared. Opportunities, folks, opportunities to learn new things are available to us all of the time. Nearly every moment offers an opportunity to grow and expand our consciousness. You know, how often, folks? How often are opportunities presented to us? That's right, all of the time. Now, true story. Thomas Carlyle spent 2 years writing his great piece of work about the French Revolution back in the 1830s. He literally poured himself into his work, striving to capture on paper everything possible about the French Revolution. He bundled up this large manuscript and he took it over to a close friend, John Stuart Mill, for Mill's personal evaluation. A few days had passed, and Mills rapped at Carlyle's door and couldn't wait to hear his comments. And when Carlyle opened the door, he noticed that Mills looked gravely ill. "What on earth happened?" asked Carlyle. Mr. Mill told Carlyle that his maid had used the bundle of papers, the manuscript that Carlyle had spent 2 years writing, to start a fire, not knowing that that precious fuel that she used was 2 years' worth of his life, literally up in smoke. Now, this is back, folks, in the 1830s. There was no typewriters back then. There was no computers. There was no nothing other than pieces of paper and writing. Days passed. Depression set in. And then one day, peering through his window, looking into space, he noticed a brick mason building a wall for a neighbor, brick by brick. The mason worked gently and lovingly to build the security wall. Suddenly, the idea struck Carlyle like a flash of lightning. He, too, needed to be a brick mason and reconstruct his manuscript. It was brick by brick, folks. Peace came to his mind as the ideas just simply began to flow in, and he published his paper, and Carlyle pushed aside defeat, produced what became the most colossal work of his lifetime. How about that? How's that for coming back from defeat? Yes, folks, it is brick by brick. It is word by word, thought by thought, dream by dream. How about chart by chart, indicator by indicator? We, too, can build the substance from which the masterpiece of our lives are produced. Carlyle's book, The French Revolution, was published in 1837, and still to this day, it is the source for those that wish to get an accurate account of the French Revolution. Folks, brick by brick. Become the brick mason of your life and build your masterpiece. 877-927-6648. Let's go check out these markets. Right now, we've got the Dow futures down about 18 points, trading out at 15,099. S&P futures off 2.25, trading at 1628.50. Nasdaq futures off half a point, trading at 29.56. Russell 2000 down a point. Really very flat out here. King dollar on the move this morning, up 20 ticks, traded at 80.94. The euro off a bit. The yen moving. It kind of a relatively calm currency, well, kind of a calm market out here, especially as we take a look at the non-calm days over the last couple, yesterday and on Wednesday. Not as calm right here in the silver market. Silver actually moving quite a bit. We'll take a look in on that stock chart here. You've got silver up 2.2%, up 49 pennies. Gold up $8. Not a big move here in gold. Natural gas back a couple of pennies. Platinum is flat. Copper is up 2 pennies. Let's go check out what's going on across the pond out here. Over in Europa, we've got the DAX is up 47 points. The FTSE up 3. The FTSE trying to add to that little hammer candle that it had formed yesterday. We'll go check in and make sure it was a hammer. Over in Asia last night, you had the Nikkei up 2%. No big deal there. Just a counter-trend move up 240 points. Of course, we handed the ball. Us here in the United States, we handed the ball off to Asia very nicely last night. You also had the Hang Seng up 0.3%. That was up 82 points. And the Shanghai up 0.6%, up $14. Again, our call number, 877-927-6648. Give us a call. We can take a look at your stock. And let's start off by taking a look here at the, what should we take a look at here this morning on Father's Day weekend? Let's go check out the futures marketplace, see if we can actually see anything out here. Let's take a look here at the ES Mini, at the 30-minute chart. We can see that nice rise yesterday. You know, certainly I called for a nice bounce in the marketplace, and where price traveled to was all the way up to the top of the resistance area. Resistance area seems to be the bottom of this 10:30 session here on June the 10th. That price level about 1632. We can see once price broke below that, and it is really close to a hammer candle on the 30-minute chart here. Not enough of a decline inside the move off of that top here. So looks like a hammer, smells like a hammer, but that really does not qualify as a hammer candle. But still, the bottom of that, you can still see, the wick here provided us with a bunch of information. We know where the bulls were really camping out, and it was at the bottom of this candle here on June the 10th on the 30-minute chart. 1632.25, and we can see once price broke below that level, this has acted as a strong resistance area. First time up was this little shooting star here at 12 noon on June the 11th, acted as resistance. So the next time that it was up there, a little bearish engulfing as we came into the 10 o'clock hour, and the market on Wednesday just simply sold off big time. Sold off all the way down to the lows that were put in yesterday morning at 2:30, and then the bulls started to rush in. Of course, we know because the market had moved into that extreme oversold condition, it was going to have to work its way off, and boy, did it work its way off. So much so that yesterday it moved all the way back up into that top of that resistance level as we came into that 4 o'clock session. The high was 1633.50. You can see only for a brief moment, which was at about 6:30 last evening, did price actually peak just above that level. Really, all that it was doing was testing that shooting star out here from 12 noon. So if you're asking me, what is my call today? My call today is to wait to see what the actual market tells us it's going to do. I can give you bullish side and the bearish side. I can give you as many items on the bullish side why this market ought to move a bit higher, as well as I can give you on the bearish side why it should move lower. And we're really kind of, there are times in the market where you just have to sit there patiently and wait for it to reveal itself to you. Certainly we can see it is up against resistance. Now, what does that actually mean when you're up against resistance? Well, just on the 30-minute chart alone, if it were to break out above this area, it says that old resistance becomes what? That's right. Old resistance would become new support. So where would be the break here? Well, the first break would certainly be above the top of that shooting star candle. So that's 1634. You're at 1628.50 right now. A close above that with some conviction behind it, a little bit of volume. That would say you would have a breakout. And if we take a look at where would that break out to, well, not that much higher right now, because what it's got is got some bearish engulfing resistance up at the level of 10 in the morning on June the 10th. What's today? The 14th. So that June 10th, what does that go back to? Is that Monday? Is that, that was Monday. So the high out there at 1642.50, a breakout occurs. That's going to be a next checkpoint out there. If it gets above 1642.50, then I think we're sending a clear message that the market is ready to, in fact, move higher. How much higher? It's very simple. To identify the target ranges, we just go from that May 22nd swing point high, 1680.25, all the way down to the low that was put in here at 1:30 in the afternoon on June the 6th, and you get above the now here's the thing, you get above the level of 16, what did I say it was? Let's go back here and look. 1642, then 1646 is just above that. That is the sweet 618 level inside the marketplace, and maybe that's all the energy. So you can see the steps up if there's a breakout, slight breakout here, it's got a number of different just natural resistance areas for it to actually get through. So now, can the market move down from here? Yeah, and if the market starts to move down from here today, then what you've got is you can have a cascading event and move all the way back down to the lows that came in at 230. There's really nothing here to stop the market from moving into those levels. However, if it does move down, what are the likely target areas? Well, you just go from the swing point low of yesterday morning all the way up to that 6:30 in the evening session here when the ES got up to 1634. So your first stop down would be 1618, and the next stop 1607. I suspect it would be 1607, just a normal 0.618 retracement. But right now, just moving sideways. Working off that overbought condition, so it's creating some energy here. We can see it's above the midline of that relative strength. So does that tell us anything? Yeah, it sort of tells us here on the 30-minute chart that it's really just building some energy to actually move higher. So that's what it looks like to me. We can also see, if we take a look at our four exponential moving averages, 8, 21, 50, and 200. They're lined up, a lagging indicator nonetheless, but still they're lined up and telling us that the momentum is actually to the upside. So if you were to ask me, well then, so what is it that you think, Steve-O son? I'd say, to me, I think this market wants to break out a bit. It wants to move a bit higher. It wants to move into those resistance levels up a bit higher in that 1642 level, and then once above that into the 1646-ish range out there. So that is on our ES Mini. Let's go check out the silver. Let's go check out Hi-Ho Silver, see what it is doing. Up 38 pennies here right now. Let's see, where is that? Got it on my charts to monitor out here. So let's go take a look at silver. We'll have to look at it maybe a little bit more during the breakout here, but take a look at this. This is a 30-minute chart. Take a look at the volume that came in on this here as we came into that 9 o'clock hour. Contract-wise, 10,000 contracts. So somebody like silver, this happened to break above. Again, it's a 30-minute chart that we're looking at, but what it did do is it got up to about 22.27. It didn't get all the way up there. It got up to 22.17. 10 cents higher was sweet old 618. Of course, it moved into an extreme overbought territory real quickly. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's see. Dow futures off about 17. ES Mini down 2. If we switch over here, let me see if I can do this. I ran into a slight problem during the break here. There we go. This is Now let's. I'm going to. This is the ES Mini here, so it's been a heck of a trader's paradise the last couple of weeks out here. Now this is the daily chart that we're looking at. I'm just going to switch this over to a weekly chart, and what you can see here is that really we've gone nowhere over the course of the last 3 weeks. If you take a look at the close coming into May 31st out here, the close inside the ES was 1627.50. We're at 1629.50, so we've got a 2-point move out here. But you would know that with these 260-point swings or so that we are having. So it is a real trader's paradise out here in the marketplace. So just kind of to put things in some perspective out here. Now, we were taking a look, or I was trying to take a look at silver before we went to the break. So let's go take a look at silver. We're looking at the 30-minute chart out here, and that had one heck of a push coming into that 9 o'clock session. Now, as we take a look, it's a fairly wide-ranging price bar, and with some volume behind it. Now, you can see here the spike into that extreme overbought territory right now. All that it's doing is pulling back, but it was also going into some pretty big volume out here. Take a look at the contracts on the way down at about 9 o'clock in the morning on June the 7th. You got almost 11,000 contracts on the way down, and it ran into, on the way up, was running up with about 10,000. So 10,300 contracts versus on the way down on the 30-minute, 10,400 contracts out here. So silver still being kept in check out here, moved up to close to that 0.618 retracement, and that's just simply coming off of the swing point high at 12:30 in the afternoon on June the 6th. That level, 2284. All the way down to the low out here at 4:30 in the morning on June 10th out at 2133 in the marketplace. If we go take a look at gold on that same chart out here, not the same, but the gold contract for 30 minutes, you'll see a little bit of a push, but really not much of one, not anything like what we saw here in gold. If you're going to take a look at the volume bars on the way down, you can see some significant resistance here set up by that 9 a.m. bar on June the 7th. 38,000 contracts to the downside, followed up with more conviction, additional conviction, another 30,000, 29,751 contracts during that 9:30 session out here. So you can see gold really up against some resistance as it tries. Take a look at the volume inside gold as it tries to move forward. No conviction to the upside, definitely conviction to the downside. Had a request to go take a look at light sweet crude. So let's go take a look at that right now. That is trading up $1.30. It looks like we're going to be paying some more at the pumps, unfortunately, out here. Right now, light sweet crude is traveling into the the resistance, you could call it from April 1st, April Fool's Day, that high of 98.22. It's gotten up to 90. Let's see, the high so far, intra-session, 98.25. Let me see here if I got the volume. I'm not going to be able to get the volume on the. I'll have to go back and take a look at the other contracts. So let's just I won't be paying attention to volume. What is it that if we take a look here at light sweet crude, there were two hammer candles that it established on a slight pullback. That hammer candle was on May the 15th. The low there was 92.40, and we saw another hammer candle on May 23rd. That area was broke once. Looked like it was broken, that light sweet crude was going to move back. That was on May 31st, but price got right back above that area. So the bull's really hanging out and protecting the area of anywhere from about 91.26 up to the 92.40. Now, where are the bears kind of protecting their turf? Well, it's really, if you take a look at this, a little bearish engulfing right here on May 21st. That says resistance at 97.35. We'll see if it closes above that today. You had a little bit of a bear sash type a piercing candle really on May Day out there, April the 1st. So 98.22, that's its next support. And if it breaks through there, light sweet crude will head up to 99.77. It's neither overbought nor oversold out here, so it does have room to move, unfortunately, to the upside. And at this stage, I have to say that the bulls have control of the ball inside light sweet crude. I spoke a couple days ago with one of our Tigers, John, in Sarasota, and we were taking a look at, great indicator when you get the rainbow convergence here, and also great indicator just simply to understand momentum in a marketplace, whether it's to the upside or the downside. Now, as we take a look at light sweet crude, I'm just noticing this right now as I pull up the chart. Take a look at that convergence that took place, what I call that rainbow convergence. It's where you've got the 8-day, 21-day, 50, and 200 all converging in one spot. And then the breakout, well, that was pretty clear, was to the upside. So momentum to the upside because it is in beautiful flag order out here as far as the 8 being above the 21, being above the 50, being above the 200. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 7 points right now. S&P off 78 cents. It is a flat market out here. NASDAQ down 96 pennies. Russell 2000 off 18. Google to the upside, $5.28. Apple off $1.33. Microsoft down 9 pennies. Intel off 3. Cisco flat. Leading the charge to the upside, Restoration Hardware. You know, I've been in that store a few times. A beautiful store, no doubt. RH is the ticker symbol, and they are trading up 16% this morning. Let's see here. Were they out with revenues? Must be out with something. So let's see. What are they? Net income 2.3 versus 1.3 million. So that's a pretty good sign there for the housing industry. Certainly the fixer uppers did revenues of 300 million versus 217. So I don't know if that what same store sales. It would be nice to see that, but it's not popping up on my screen. But they are the leader, most definitely in the clubhouse. And speaking of clubhouse, it is U.S. Open weekend, so it's a beautiful weekend for all of us golfers. Google up $5 right now. Tesla Motor up 3. Solar City SCTY up 219. GameStop Corp up $1.40. Green Mountain Coffee Roasters up $1.30. 3D Systems Triple D out there up 60 cents. To the downside, Myriad Genetics MYGN off 10% this morning, down $3 and a change. Just a downgrade alert is all that I can see on the news there. PVH Corp off about $2, down 1.5%. Apple off about $1. Otherwise, nothing substantial dollar-wise to the downside here this morning. So, in honor of Father's Day, and I do wish all of you fathers, all of you grandfathers, how about all of you mothers that have to fill in for us fathers, and all of you single moms that have to be a mom and a dad as well. Each of you, I do wish you a happy Father's Day weekend. So let's read one of my favorite Ralph Waldo Emerson little poems out here. And this is our responsibility, quite frankly, so this covers each of us that are listening in here, to laugh often and much, to win the respect of intelligent people and the affection of children, to earn the appreciation of honest critics and endure the betrayal of false friends, to appreciate beauty, to find the best in others, to leave the world a bit better, whether by a healthy child, a garden patch, a redeemed social condition. To know even one life has breathed easier because you have lived. This, folks, this is to have succeeded. And you are absolutely successful out there. Now, let's go check out these markets here a bit further than this. I could get a little off track. That'd be pretty easy. It is Friday. So what are we going to go look at out here? Let's go take a look at, see what's going on inside the currency world out here. Let's stop in and see what's going on across the pond with the Queen. Let's go take a look at the euro, see what we have out here. We've got that nice 0.618 Gartley sell pattern that set up. Had a real nice move. Really completed that pattern here yesterday, getting up to the high of 1.33892. So far today here, we're seeing a little bit of bearish movement, a little bearish confirmation with a bearish engulfing candle. Right now you got the euro traveling out at 133.16. Normal pullback here should take the euro down to the 1.30222 level. That is nothing more than the 618 retracement of the move off. Well, quite frankly, that's actually off of the C to D leg out there, and you can see the A leg was really A to B leg. The A point, the swing point on April 4th, wasn't really that much above. So right around, we'll say right around the 1.3022-ish level is where the euro should pull back to. That's assuming that we get a close today below 1.3335 out there, because that would set up your bearish reversal signal inside the euro. A lot of time left in the day to trade out here. Let's go check in on some of the other currency pairs. Let's go see what's going on over in Japan out here. Let's see if we can find a daily chart. Oh, we most certainly can. Looks like in the currency world here, yesterday, another wild swinging day out here. And today, when I say wild swinging, going from a high of 96.08 down to a low of 93.77. What is still holding in place out here is this 0.786 Gartley buy pattern inside the euro, but really continuing to move down, get a wide-ranging bar right here, as the retest of that area was taking place on June the 11th. A little doji there, just nothing more than a timeout to me. Dojis to the downside don't have as much meaning as they do at the upside here. And if we take a look at the following candle yesterday, wide-ranging price, not a wide-ranging bar, but if you take a look at that doji, the Japanese have an expression when you take a look at a doji candle, and a price below says that it's like in the fall when leaves are falling off the tree. So we've got more leaves here in Japan falling off the tree. That sets up a move inside the U.S. dollar, Japanese yen currency pair of a pullback to the April 2nd swing point. That would be your 100% move of a move on the daily charts, taking into the 92.55 range. If we pull this back even more out here, it seems like that is likely. Of course, this Gartley sell pattern, if it does fail, that certainly can turn into a butterfly. That butterfly expansion out here would take you into about the 89 level, 89.50 or so. That would be your 1.272 expansion of the U.S. dollar, Japanese yen. Really not a lot moving in the market. I mean, Dow's off 25 points, but let's go back in and just check out those the ES mini here, see if we can get some kind of feel for what might be going on. And so far, really not much. Just a sideways move. So in my opinion, the market still has not revealed its true direction, at least its next direction out there. And, with it being Friday, maybe just a little bit of a off day would be nice. And but we'll take whatever the market will go ahead and give to us. So let's go look at some of these stocks out here that are popping and dropping. Let's go look at Restoration Hardware. Let's go see what this little guy is doing. RH is the ticker symbol out there, not to be confused with RL, Ralph Lauren. So let's go take a look at RH. And gapping up this morning, doing nicely. Well, this thing had take a look at this equities. How about this? Let me refresh my screen, make sure we've got some accurate data. Don't you think the folks who own Facebook shares wish that their stock chart looked like this? Look, this is a thing. This is the way that you want to see a IPO workout, in my opinion. This thing here, Restoration Hardware, comes out November 2nd, 2012 out here. The low of the session, 30.32. The high is 33.15. So it looks to me like this was priced properly right from the get-go. If you take a look at the Restoration Hardware, it pulled back into that level back here with some light volume on December 21st, 2012. Gets down to a low of 30.92. By the way, it's trading out right now at $69. So it's had one heck of a nice move since December out there. One of the nicer moves. Now, did have some nice volume come into the equity. I don't know what was behind that May 15th day. 4 million shares. When I say nice volume, it's not as if this is a heavily traded equity out here, but it did have some nice volume that came in on May the 15th. Not wide price spread, but certainly accelerated volume. That helps you to identify some support, and that support was tested. That support was tested on the following session with 377,000 shares. Looks like it was tested back here on May 23rd with 188,000 shares. So this level here is amply tested here. Now it is gapping up. So you might want to go ahead and put Restoration Hardware. This is certainly in the overbought territory. You might want to go ahead and put this on your charts or your list of charts to watch for. See if this can pull back. Ideally, it'll come back to today's breakout, which will be somewhere around $60, maybe 57.32. Maybe ultimately come back and test the high of this May 15th level right around 53.93. So it might be something you would want to entertain scaling into. That is under the assumption that any pullback here is on light volume. So that is on Restoration Hardware. Not a bad-looking stock chart at all. Let's go take a look at Myriad Genetics, MYGN. That's off 10% this morning, so that is struggling. MYGN, let's go see what it is doing. So give me a moment here to pull this back. Looks like I looked at it at one point and time. Let me just delete everything and reset this all together. Oops, didn't mean to do that. And so looks like this is going to pull back and at least test its 200-day exponential moving average. Had decent volume here yesterday as it moved down, so some news must have come out yesterday as well, or I think this was just a downgrade out here. But this morning here, gapping lower volume-wise, 3.3 million shares so far yesterday as you had volume off of the highs. Not a good thing. Absolutely not a good thing. This is truly volume off of its highs. You had 16 million shares. So let's take this back a bit further and see what it might be doing out here. In fact, let's go ahead and put Myriad on a weekly chart, see if we can see any volume out here. Refresh my screen. I mean, other than yesterday's volume, this week's volume. So, yeah, Myriad ought to come all the way back here to this high-volume bar, May 7th, 2010. That level somewhere between 24.50 and 17.05. If we just take a look at retracement levels now, with the coming off of the low here back in July 2010, had a nice little bullish engulfing candle that took place shortly after that, and all the way up into the high out here. From yesterday, or this week, I should say, because we're looking at a weekly chart. The 0.618 level, retracement, that is, $23.34. So, yeah, getting into this high-volume weekly bar from May 7th, 2010, that seems like the likely target, and that is for ticker symbol MYGN, Myriad Genetics out here. We got Toyota Motor Corporation. That's moving down a couple of points here. So let's go take a look at that chart, stock chart. TM is the ticker symbol. Let's go see what this looks like. This has certainly benefited big time from the move inside the Nikkei. Take a look at this. Putting in a low back here in November of 2011 out at $61. Did a full double. Got up to a price level on May 22nd. The high was 130.99 out there before it did its key reversal session out here inside Toyota Motor. Let's go see what this is going to do here. Now, this is probably just the A to B leg has been formed inside Toyota Motor. Let's go see what your A to B equals CD down would give you. Let's assume that the high right now came in here on June the 10th on that little bounce out there. It says Toyota Motor coming back into about 103. So if we go down, that's your 1-to-1 A to B equals CD. If we take a look at a high volume bar breakout, that would take you into the April 11th area, and that has volume of 2 million shares out there. So should find some resistance as it gets back into this swing point here from June 6th. But if it can bust through June 6th, and that swing point only has 695,000 shares. It'll need to bust that swing point with more than that because you got 2 million. Otherwise, if it busted, let's say it busted on less than 695, that would be nice, and goes ahead and completes the move to 103 or 97 down there, what you'd end up likely getting is a Tiger Gartley pattern out here. So it's got a couple areas here that should find some decent support, but we'll see. The Nikkei has some juice to run much lower. Take a look here at that little rainbow convergence. How about that inside Toyota Motor? This shows you here you didn't actually have to, and you've got another one that took place right back here at the breakout on August 3rd of 2012. So you got one little convergence there that broke to the upside, and then you had your second rainbow here, a double rainbow system back in November 15th, 2012. So not a bad little tool to add to your repertoire. Let's go take a look here at the world markets and see what we've got going on out there. Inside the world markets, let's start off by taking a look here at the FTSE. The FTSE here yesterday creating a nice hammer candle out there as it was coming down into the 200-day exponential moving average right at that, got down to a low of 62.0571. So you're seeing a little bit of follow through this morning, but not too much. But this thing here, if this thing breaks, I mean, this is a heck of an A leg that it has created here. So ideally, I don't know about ideally, but if we take a look at where could this bounce to, the 0.382 level, about 64.61, that would set up one heck of an A to B equals CD down, because you're looking at about almost a 10% decline so far on its first leg. That's coming off of the high from May 22nd out at 68.75 down to that low of 62.0571 in the marketplace. Let's go take a look at the move over here in Asia last night. Let's take a look at the Nikkei. Even though the Nikkei was up a couple hundred points, if you take a look at the candle out here, really no big shakes inside the Nikkei. An inside day is all that it had, working off some of its oversold territory, but the Nikkei's got more room to run. And, I don't have the volume. I think Tom said that the Nikkei's volume broke the swing point from June 7th, 2013. If it did, then the A to B equals CD down on this is massive, because it's already had a 22% decline, and it says it's just lining up another one. So if in fact it did break out that B point, the B point being the trading session here from June 7th with volume, it becomes one of those defies gravity. It says that the Nikkei would come all the way back to the 0.786 retracement level, right around 10,200 out there. So we do live in interesting times out here. So did your Obi-Wan buy Nikkei for your forecast C to D? Z asked a question, do you or Obi-Wan buy Nikkei for your forecast C to D? I'm not sure what Z's asking there, but in any event, folks, right now, let's see, take a look at these markets here, and I'll go back and take a look at that question. Flat market. Dow is up $1.91, S&P up $1.75. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Not really much change in the market, just slightly red here right now, so no big shakes out there. And I think, Z, you were asking about the Nikkei and whether or not I had bought this C point down here. Maybe you're talking about the low that came in on June the 13th, and the answer there is no, I certainly haven't. I think the Nikkei has more to go to the downside, so be looking to buy some other pullback than what we've seen so far out here. And like I say, this could be a huge A to B. The A to B leg here of 22%. I don't think that is done. I think it's going to be, looks to me right now like it could be pretty amazing how far the Nikkei could actually pull back to, which would be down into that, believe it or not, 10,200-ish range, the 0.786. So we'll take things one thing at a time. You know, maybe the Nikkei was just simply the first one to make its decline. And the daily chart here, if you take a look at the unfavorable sell cycle out here. If we take a look at going back to the 200-period EMA on April the 30th, that number is 10,838, and that would be a normal pullback. So 10,838, that's your normal first target. So 10,838, you got the 0.78 to be in between floors, which is 10,186 down there. So we'll just have to wait and see what takes place inside the Nikkei. Let's go check out natural gas out here. Let's go see what what that is doing. Natural gas still trying to move down to the bottom of its price channel trend line and the nice Gartley buy pattern that it may be setting up there. We won't know till it gets down into about the 360-ish range. If it gets down there, you get a bullish candle pattern, a confirmation signal. Then you might see a move, and a move could be all the way back up to the top of that price channel that it established, going all the way back into the April 18th low of 2012. We peek in here on bonds, go see what bonds are doing here. Bonds, here's the weekly chart of bonds. So on bonds, if we take a look at it, really up against some pretty stiff support. Take a look at this. Coming off of the lows out here from February 11th, become February 11th, 2011, that low out there, 116.26. What has formed out here, in essence, is a 0.382 Gartley buy pattern. That, folks, is actually the strongest of Gartley patterns that you can form out there. Now, what we've seen here, this is the continuous contract that we are looking at. What we also see is coming off of the low here on March 23rd, that swing point low, which was 135.05, all the way up to the high that was put in here. Now I'm using the high out here of, I should use a different high. Won't make a big difference, but let me do that anyways. Let's be accurate here. Especially when I see a error. So we're going to go back and we're going to use the high, the correct high, which is the July 27th, 2012, 153.11 out there. What we can see is that we're also at the 0.786 level on the continuous contract for the 30-year Treasury. So you're at a 0.786 retracement. You are at a 0.382 retracement off of a longer-term bottom out here to that same high. And what we're seeing here this week is actually is a bullish engulfing candle. You know what that says, folks? That actually says that bonds here on the weekly chart, that they actually want to move higher. And now maybe we'll see the correlation come back with bonds moving higher, our markets moving lower. We are still in the downtrend. I didn't update my summation index here, but the bounce yesterday, although it was nice breadth in the markets. The New York Stock Exchange had some nice breadth in there. Summation index will take a lot of time before it will actually turn up in the marketplace. But the New York Stock Exchange, that is still in a downtrend out here, and it is one of the weaker links. But yesterday morning, as we were calling for the bounce, one of the things we were really paying attention to, two things. We were paying attention to the Russell 2000 because that was leading, as well as the New York Stock Exchange. Folks, it is Fabulous Friday. Happy Father's Day out there to all of you celebrating. And always remember, you have an amazing power within yourself, and that power is so strong, it'll create a life of abundance. But most of all, folks, it will create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Friday, a great weekend. Look forward to seeing you soon. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.